there was a few good and bad things. Obviously, the COVID situation has impacted the overall business, and you can kind of see that in the results in iPhone, iPads, and Macs being a bit lackluster. But at the same time, the two parts of the Apple story continue to grow, which are services and wearables. And just to put a context around it, wearables is now a bigger business than Mac or iPad at a $28 billion run rate. And likewise with services, where the profitability actually increased, so the gross margins actually increased by 100 basis points. So it's been a bit of good and bad, but they did call out, Tim Cook last night called out some green shoots, as in they're kind of saying second half of April has been better than expected. They're seeing some signs of recovery. This is not very different from some of the other tech companies that have reported and sort of called out in their earnings call as well. The one bit that people were a little bit sort of disappointed was the buybacks were slightly lower than expected, $50 billion versus $75 billion was the most of the expectations. But Luca pointed out that, look, there is a $40 billion authorization already outstanding. So if you add them, you're still sitting at a healthy $90 billion buyback authorization.
Amit, what we've seen clearly in these numbers, a change in the product mix. Typically before this crisis, a lot of consumers were buying the brand new iPhone, also wearables from the earpieces to watches. But this time in the crisis now, you've got this behavior where people are saying, well, if I'm remote working, then I need the right computer, I need the right iPad, also homeschooling. And it was interesting that Tim Cook said that people were not skimping on how much they were spending. They wanted the best products with the strongest battery power as well. What does it mean in terms of margins, at least short term, where you see this product mix change?
Thanks, Karen. Look, there will be some adverse impacts on gross margins, not just for Apple, for a lot of the other companies who are sort of manufacturers, as they've called out on their earnings call as well, as the supply chain sort of rejiggles to accommodate for continuing to serve the customers amid this shelter in place and social distancing requirements. And that's very much true with Apple, as they've pointed out as well. But at the same time, they did call out that their supply chain is very durable and resilient, as it has shown. I mean, after the initial shock in China and other places, they pointed out that their manufacturing facilities are all over. So the final assembly, obviously, there's bit in China, bit in US, and all over the places. So they highlighted their strength in terms of managing the supply chain, and they, if you look through the, I guess, next few quarters, they should be able to get back to normal. I do have to point out that the services business is a particularly higher margin business at 67% nearly, and that's well north of the corporate average. So that's helping quite a bit because it's growing fast and it's a bigger part of the business.